What is up, you guys? Today, I want to talk very briefly about bank stocks. So every single year, a stress test is done to the different banks by the Federal Reserve. This is basically to see how strong a bank is if a financial crisis or economic crisis were to happen, like we're seeing right now. And this was done a couple of days ago, but some news just broke about 3 hours ago that all of the banks, besides Wells Fargo, are going to keep their dividend, and Wells Fargo is actually going to cut. And this is pretty big. If you guys have seen any of my other videos on banks, I don't primarily invest in them, but the one bank that I refuse to ever invest in is Wells Fargo, right? From a customer standpoint, I just hate them. And from an investor standpoint, I just hate them. But this is really important, and this is news that could actually end up shaping, what the next couple of months are going to look like, especially since earnings season is coming very soon again. Feels like, Q2 just passed or Q1 just passed, but, earnings are coming up soon, and banks are always the first to go. So if we're going to get a big move in the market to the upside or the downside, it's probably going to be based off of earnings. So let's take a look very quickly at this article. So nearly all of the largest United States banks on Monday said that they performed well enough on the Fed's most recent stress test to maintain their quarterly dividend. All of them but Wells Fargo. So Wells Fargo said that the Fed's assessment of its business will warrant a reduction to its quarterly payout. So they're actually not cutting the dividend entirely. Like when I first read that, I was like, wow, they're getting rid of the dividend entirely. Like the stock is going to crash, but they're not, they're just going to cut the quarterly dividend a bit. How much we'll actually see. So, while the nation's largest banks were quick to drop stock buybacks at the onset of the, can't say that word now, the group is often loath to cut its dividend payments, which are viewed as a steady source of income for investors. So primarily, if you look at who invests in banks, of course, it's big hedge funds, but it's also, from a retail investor side, people who just want to hold a stock for the long term, collect a dividend, kind of, I don't want to say boring investors, but people like my grandfather, they love bank stocks, right? And so if we quickly look over, this says the industry was forced to slash dividends after 2008 financial crisis and has only slowly built them back up since the Fed first allowed banks to raise dividends in 2011. Given an unprecedented stress because of everything that's going on in the American economy, the Fed's last week announced new restrictions on the U.S. banking industry. So to kind of go off on a side note, a lot of you guys are probably like, well, what does the Fed have to do with banks and how they run their dividends and stock buybacks? For those of you who don't know how the Great Depression, well, one of the main reasons the Great Depression was so bad was because we didn't have a centralized bank. There's plenty of different things you can look at on YouTube, and I highly recommend you looking into it, because without a centralized bank, even though I don't agree with everything the Fed's doing, the economy is in a much worse state. Actually, JP Morgan, the actual JP Morgan, those guys were actually there to bail out the United States economy, and if they weren't there, we may have never recovered to where we are and actually thrived as the world's biggest economy. But yeah, you should definitely look into it. It's really important, and I think for a lot of you investors, you would really like to understand how that happened and how we got a centralized bank. But here's what Goldman Sachs, Bank of America, Wells Fargo, Citigroup, and JP Morgan said. So Goldman Sachs dividend for the quarter ending March 31st is going to be $1.25. The new dividend is $1.25. So nothing changes there. I'm not going to go over what the CEO said. Citigroup, 51 cents. So that is staying. 35 cents for Morgan Stanley. That's going to say Wells Fargo 51 cents and reduced. The expected payout is to be determined. So who knows, right? If you're a long-term investor in Wells Fargo, who knows what your dividends are going to be? Bank of America, 18 cents, staying at 18 cents. JP Morgan, 90 cents, staying at 90 cents. So what does this mean for investors, right? I feel that a lot of people who actually invest in banks do not want to see this, right? They don't want to see a company cutting its dividend. If I'm somebody who is invested in Wells Fargo, I'm not happy, right? I don't know how the stock market's going to handle this news. As of right now, overall, the NASDAQ futures are up like slightly. SPY futures are up very, very slightly, and the Dow is about even. But going into the next couple of weeks, bank stocks are going to be very important. We can see here that this is a chart of Wells Fargo, ticker WFC. we can see here that they actually have earnings coming up on the 14th of July. So only 2 weeks away, right? And with the whole Rona numbers going up and up and up, banks not really doing too well during the stress test. Wells Fargo really, not doing well during the stress test. I think that in order to get the market to move to either side, we need a catalyst, and earnings are going to be a big deal. So let me know what you guys think on that side. But from a technical analysis standpoint, right? I actually called this out in my private stock market mentorship group. I'll put the link down below for you guys. But we called this out for puts, and I got some puts last week. Didn't hold them long enough. I'll be honest. We had this descending triangle. So for those of you who have ever played a descending triangle, what normally happens is you have a support here. So we had, in this instance, a support at $26.70, and we had a gradual descending resistance that ends up at what is called an apex. So I say it all the time, it's disgusting, but think of like two fingers popping a pimple, right? At this point, we're popping the pimple, it gets to the head of the pimple, and then 9 times out of 10, we break to the downside. Now, I talk a lot about it, but fundamentals usually line up with technicals. In this standpoint, we had technical bearish indicators, a bearish sign that the stock was going to fall below this key support of $26.90 on the 200-day SMA. And ironically, stress test came out. Wells Fargo took a big fade, bounced back up. This is where I grabbed my puts. I sold them Friday, kind of ended up even today, actually up 1.42%. And I would expect a pretty sharp sell-off tomorrow. Tell me what you guys think. Are you going to be, buying Wells Fargo or any of these bank stocks long-term? I've made a lot of videos before on bank stocks, so definitely subscribe to the channel. If I were to, quickly say if I'd invest in any, it would probably be JP Morgan Chase, or like a Morgan Stanley. I personally would never touch Wells Fargo, but let me know what you guys think, right? Hit the like button, comment down below. I always want to hear from you guys, right? This is about building a community, a strong community together on YouTube as well. Hit the subscribe button, and I will see you guys tomorrow. Peace.